Good evening and welcome to today's U.S. market recap for Friday, May 8th, 2026. I'm here to break down everything that moved markets today, from a blockbuster jobs report that blew past expectations, to the relentless surge in AI and semiconductor stocks, to ongoing peace talks between the United States and Iran. It was a day that Wall Street will remember. Both the S&P 500 and the nasdaq closed at brand new all-time highs, and we'll tell you exactly why. Let's get into it. Let's start with the headline numbers. The S&P 500 advanced 0.84% to close at 7,398.93, a new all-time high. The NASDAQ Composite surged 1.71% to finish at 26,247.08, also a record close. The Dow Jones Industrial Average, however, barely budged, ticking up just 12 points, or 0.02% to settle at 49,609. So what we saw today was a clear split between tech and the rest of the market. The Dow, which is more heavily weighted toward traditional industrials and financials, lagged significantly. But the tech-heavy NASDAQ and the broad S&P 500 had a banner day. Zoom out to the weekly picture, and it gets even more impressive. The NASDAQ climbed 4.5% for the week, while the S&P 500 gained 2.3%. Both indexes just notched their sixth consecutive winning week, the longest winning streak since 2024. The Dow, by contrast, eked out a meager 0.2% gain on the week. The message from the market today is clear. Investors are willing to pay up for AI-exposed growth, and they're increasingly optimistic that the geopolitical risks hanging over the market are beginning to ease. Now let's talk about the catalyst that kicked off the rally this morning. The April jobs report released at 8:30 a.m. Eastern Time. Non-farm payrolls rose by a seasonally adjusted 115,000 in April. That's down from the unusually strong 185,000 jobs added in March. But it came in well above the consensus forecast of just 55,000. The unemployment rate held steady at 4.3%. To put that in context, Wall Street was bracing for a much softer number. Analysts had forecast only around 62,000 new jobs. Getting 115,000, nearly double the estimate, was a significant positive surprise that immediately sent futures higher. Job gains were led by healthcare, which added 37,000 positions, followed by transportation and warehousing, with 30,000, and retail trade with 22,000. Federal government employment, however, continued to decline. Average hourly earnings rose 0.2% for the month and 3.6% on an annual basis, both slightly below expectations, which had called for 0.3% monthly and 3.8% annually. That's actually good news for the inflation picture. Softer wage growth reduces the risk that the Federal Reserve will feel pressure to hike interest rates. And that's exactly what the market wanted to hear. This report also marked back-to-back months of hiring above expectations, reinforcing the view that, despite real headwinds like higher oil prices, sticky inflation, and higher for longer interest rates, the labor market is holding up better than the pessimists predicted. The jobs data set the tone for the entire session. It gave investors the confidence to buy risk assets, and that momentum carried the market to record highs by the closing bell. Now let's talk about the stocks that really drove today's gains. AI and semiconductors. Tesla and Nvidia were both up over 1% on the day, while AMD gained 2%, putting it on track. For a remarkable 15% surge for the week alone, that's not a coincidence. This has been a week of standout earnings from the tech sector, and the AI infrastructure story continues to get stronger. Companies in the AI infrastructure and software space continued to rise after leading the rally all week. Their recent earnings cited stronger productivity and growing demand, suggesting the AI spending cycle remains undeterred by macroeconomic headwinds. The AI-driven memory boom has shown no signs of slowing. Massive AI infrastructure and data center spending drove high bandwidth, memory and conventional DRAM prices to fresh record highs in early 2026, and memory makers cashed in. To zoom out a little further, Gartner forecasts global semiconductor revenue to exceed $1.3 trillion in 2026, the highest growth in 2 decades, with AI semiconductors projected to represent 30% of total revenue. That's a staggering number, and it explains why investors keep coming back to this sector, even after enormous year-to-date gains. AMD, for example, was already up 21% year-to-date heading into this week. Today's move adds to that. The stock is on what Barron's has called its best run since 2005. The key takeaway here is that, despite concerns about valuations and overbought technical conditions, institutional money continues to rotate into AI-linked names. The earnings results are validating the hype, and that's what keeps the rally alive. Now let's turn to the geopolitical story. That's been casting a long shadow over markets for months. The US-Iran conflict and the fragile ceasefire that's been holding just barely since early April. To understand today, you need some background. On February 28, 2026, the United States and Israel launched large-scale strikes on Iran, marking the start of the 2026 Iran war. The attacks included the assassination of Supreme Leader Khamenei, On April 7th, the United States and Iran agreed to a 2-week ceasefire mediated by Pakistan. Since then, the ceasefire has held but only barely. This week, the White House said it believes it's getting close to a one-page memorandum of understanding, with Iran to formally end the war and set a framework for nuclear negotiations. Among other provisions, the deal would involve Iran committing to a moratorium on nuclear enrichment, and both sides lifting restrictions on transit through the Strait of Hormuz. The U.S. expects Iranian responses on several key points within the next 48 hours. Nothing has been agreed yet, but sources said this was the closest the parties had been to a formal agreement since the war began. That optimism, even if fragile, was enough to move oil markets. Oil prices fell this week as the market hoped for a U.S.-Iran deal, though Brent crude has since stabilized around $100 per barrel amid ongoing violent confrontations in the Persian Gulf. Today, stocks rose even as there were fresh military exchanges in the Middle East, underscoring just how much the market has priced in a deal happening and how resilient sentiment has become. The bottom line, markets are betting on diplomacy winning out. If a deal materializes, oil could fall sharply. Inflation pressure eases and the Fed has more room to breathe. That's a powerful tailwind for equities. But if talks collapse, expect a sharp reversal. Let's step back and look at the bigger picture for a moment. All three major averages posted weekly gains, propelled by strong earnings from the tech sector. This 6-week winning streak is the longest we've seen for the S&P 500 since 2024, and it comes in the context of a market that, earlier this year, faced serious headwinds from tariff fears, geopolitical conflict, and sticky inflation. The jobs report also backed bets that the Fed could hike rates this year, given higher core inflation and surging energy prices. Yet the market shrugged that off entirely, choosing instead to focus on the earnings momentum and AI spending cycle. That tells you something important about market psychology right now. Investors are in a good news is good news mode. Strong jobs, data signals, economic resilience, and even rate hike fears aren't enough to dent the enthusiasm around AI. The VIX Wall Street's fear gauge has remained subdued, reflecting growing confidence that the worst-case scenarios for both the economy and geopolitics are becoming less likely. Before we wrap up, a quick note for viewers of this channel. The Save Investing app is now officially live and completely free. It brings together real-time market news, personalized alerts, and an economic indicator calendar all in one place. Available at SaveTicker.com, the App Store, and Google Play. If you want to stay on top of market-moving events like today's jobs report in real time, it's worth checking out. So to summarize today in 4 themes. First, the April jobs report came in at 115,000, nearly double expectations, confirming the labor market is resilient. Wages are cooling and the Fed has room to hold. Second, AI and semiconductor stocks, led by Nvidia, AMD, and Broadcom, drove the nasdaq to a 4.5% weekly gain, backed by record earnings and surging data center demand. Third, U.S.-Iran peace talks are at a critical juncture. A deal framework is being negotiated, oil is pulling back, and markets are pricing in a diplomatic resolution. But the situation remains volatile. And fourth, the S&P 500 and NASDAQ both closed at all-time highs, capping a 6th straight winning week and reflecting broad-based investor confidence. Next week, all eyes will be on whether the Iran deal framework materializes, how oil prices respond, and whether AI earnings momentum can sustain these record valuations. That's your full recap for Friday, May 8th, 2026. Stay sharp, and we'll see you next time.